Welcome to our 5 on 5. We're pleased to have Collin Mullane from the Rogue Valley Association of Realtors join us. Collin, the annual statistics report for 2012 was released today. What kind of year did we have?
You know, we had a great year. Comparative to years that we just had gone by, we had a really good year. I'm always cautious when I say that, though, because there's still a lot of homeowners out there that are under distress, that are getting foreclosure notices or having to do a short sale. So when I say it's been a great year, it is relative to previous years. It doesn't mean it's great for everybody, and we're certainly sympathetic towards those folks that are still having to move through some tougher times in their own housing market.
Now, are there a lot of good deals out there right now for prospective buyers?
Not as many as there were last year. We've seen the lowest inventory we've had, I would say, in well over a decade.
Wow.
We tracked this year, starting in January, how much a month's supply we have. So in other words, if new houses came on the market with the current buying activity, how long would it be before we ran out of inventory? And earlier in the year, it was as low as or it was as high as 7.2 months supply. And right now, the end of December, it was 3.5 months supply. So we almost halved the inventory relative to the amount of buyers that are out there. So we saw an increase in buyer activity, a decrease in supply, and so that's made a big difference. So there's deals that are a lot less frequent, and the buyers got to be willing to move on a lot more quickly than maybe they were a year ago, certainly 2 years ago.
Now, we hear a lot about why the housing market it's so important to our economy generally, our economy on a large scale. Why is that so important?
You know, there's a lot of big factors that go behind this, and there's a lot of different statistics that bear that out. Some of the factors that get attached to that, of course, every time a home is sold, there are multiple people involved in the transaction, from the realtor to the title officer to the lender. And then once people buy homes, typically they take care of them at a different level than they might if they were just renting, for example. They're going to go to Home Depot and maybe buy that new kitchen sink. They're going to go maybe do the garden. They'll take pride of ownership. Maybe they'll paint the house every 7 years as potentially recommended. So there's a lot more hands-on involvement that goes on with the homeowner. And every time they go to Home Depot or they go to a local carpet store or something like that, they're bringing local money into the economy that may not have been spent by them had they not been a homeowner versus a renter. So there's that element of it. They reckon that about 25% of the economy is made up from the housing industry because of the various different spider effects, if you will, that go out there. Also, you look at school districts, et cetera, and homeowners and those types of things. And oftentimes homeowners are more involved with the process within elections. They can vote in bond measures. They've got a more of a say in what they're doing versus a tenant who is typically, hoping their landlord isn't the one that decides to up their rent to compensate for paying higher taxes for bond measures in schools, et cetera. So it's a different type of a mindset. It's a different type of what goes on. And so it is a big part of our economy, locally and nationally.
Sure. Okay. I want to ask you about foreclosures and short sales, but first we're going to take a quick break. Stay with us. Welcome back to our 5 on 5. Again, we're here with Collin Mullane from the Rogue Valley Association of Realtors. Collin, what's the status of the foreclosures and short sales in our area? Are we losing those? Are they becoming traditional sales now?
You know, statistically, they've definitely dropped off this year. They're the lowest they've been in the last 4 or 5 years in terms of how much of our market they make up. In January, 39% of all sales were what we call non-distressed sales or normal sales. By the end of this year, that was as high as 53%. There's a big factor behind that, though. It doesn't mean that we're not just moving through it, but there were two big things. The big banks are still fighting the mortgage electronic recording system, registration system, as well as Oregon introduced Senate Bill 1552 last year, which slowed the process down, requiring large lenders to mediate with homeowners. That's a simplified version of what's been going on. So the banks have actually had to hold back a little bit on the process that they'd had prior. So we expect them to move through that piece early this year, and you'll start to see foreclosures come back on. I don't believe you'll see it at the pace that we saw previously because we have turned that corner, but there's still a lot of inventory that you'll see coming in the pipeline next year and the year after that as we continue to move through that.
Now, what about lending? We hear a lot about how mortgage rates are so good, but do you have to put more money down on a home than you used to?
In certain circumstances, absolutely. You still have FHA financing available to most folks, which is as little as 3.5% down, but it's a more costly loan to get into. There's more upfront costs, and there's mortgage insurance, which is not cheap either. That gets paid on a monthly basis for the up until there's 20% equity in the home. So that's really tough. The real factor for buyers to look at right now is, can they afford the home? And really the question to ask is, where are you comfortable? How does it fit into your household budget? And then work backwards from there. If you can afford $1,000 a month, what does that equate to in terms of a purchase price? How much money can you put down? The more you can save, the more you can put down. The less mortgage insurance, the more affordable the loan will be over time. But right now, folks are looking at all different options that they can, because the deals are still there with the interest rates as well as the low prices.
A lot of information, Colin. Thanks
Great.
for dispensing it for us. Appreciate
it.
Stay with us. We'll be right back.